All right, billionaire Elon Musk has made a $43 billion hostile takeover bid for Twitter. Joining us to talk more about what a hostile takeover is and what might come next for Musk and Twitter is Brent Wilsey of Wilsey Asset Management. Brent, good morning. Happy Easter.
Good morning. Happy Easter.
Okay, so we are hearing ever since this all started, Elon Musk started out by buying 9.2% stake in of the shares, I guess. And now we keep hearing this hostile takeover. What exactly is that? What does it mean?
Sure. A hostile takeover is when the company that's being acquired does not want to be acquired. They're saying, no, we don't want your offer, walk away from us. So what the acquirer has to do, they have to do it on what they call a non-friendly basis, to where they're going to step in, they're going to take it anyways, they're going to get on board. And that's what Elon Musk has started so far, as opposed to what we call a friendly takeover. Everybody's happy and they like the deal and so forth. Twitter at this point in time does not like the deal. There are things they can do, which they have done already. And what they've done what they call a poison pill to make it harder for the acquirer to step in and buy those shares.
And what exactly is the poison pill? Is that as simple as inflating the price of the stock?
Well, they do different things. There's different ones they have. And Twitter's chose to use one where any shareholder wants to buy more than 15% of the company. What the company will then do is they'll offer to the existing shareholders many more shares at a substantial discount. So what this does makes it much harder for that person to come in and buy more shares because they're being diluted. It many times voids the deal because it makes no sense to do that. It comes too costly. So Twitter, the board met last week and they decided, yes, this is the way we're going to go. There's other ones called a golden parachute, a crown royale, they call it, different ones they can do. But Twitter went with this one here, and I think it's going to be pretty effective.
What options does Elon Musk have at this point?
Well, what he can do, he can go directly to the shareholders. Say, you know what, I'm not going to deal with the board. I'm going to the shareholders. This is called the tender offer. And he can put out to all the shareholders, say, look, I will buy your shares at $54.20, what's his price. If you want that, I'll go directly to you. He can also do what's called a proxy fight, to where he goes to the shareholders and also says, let's get rid of the board of directors. I want to put a new board on there to turn this company around, to do better things. So the shareholders can benefit. The question is Elon Musk the one that can really do this? He's talked about economically, he's not, trying to do it for that reason. He says he's trying to do it for free speech. So do the shareholders want that or not?
Is that his final offer, or could he offer more?
Well, many times in these hostile takeovers, they do come back with another offer. It happened with Kraft Foods for Cadbury and also InBev for Budweiser. The first offer was not the one they wanted. They came back, and eventually the deal was done. So Elon Musk might be able to do that. I know he says, and I think everybody says this one, do it. That's my final offer. Well, in the back of their mind, they do many times have another offer. So we will see. But again, as Elon Musk has said, this is not a great economic deal for him. He is the richest man in the world. But also, too, that may not stay that way if he keeps doing this, because Tesla shares, which is where his wealth comes from, they could start dropping in price. Because is this another thing he's going to do on top of trying to run Tesla and SpaceX? And he also has, the Starlink. I mean, these different things. Is the guy just spreading himself too thin?
Yeah, and you just mentioned it a moment ago. It appears that the reason he wants to do this is because he looks at the censorship by these big tech companies, and he's had it, and he wants to open it up to free speech.
Yeah, and you have to applaud him for that. But it is a business, and the business does want to make money. We've talked about his funding. That's going to be hard as well, because a lot of private equity firms or other companies may not want to step in and give him any money, because they're saying, well, wait a minute, if you're not going to make money here on this, we love free speech, but we still have to make money as well. He sold, $16 billion in stock a few weeks ago. Had to pay tax on that. He can't really step in and buy, sell $40 billion of stock. He'd have to pay tax on that. He's really in a difficult situation. He needs somebody else to work with him, again, either private equity or someone that will loan money against his shares. There's a good chance, he said, if this doesn't go through, he would walk away from it. We will see. I know he always surprises people with things he does. And I also got to mention, too, the SEC, the Securities Exchange Commission, has been on him constantly since 2018. They're looking at this deal very closely as well, what he's doing. So this is a very interesting situation. I'll put it that way.
All right. It sure is. We'll see how this one plays out. Brent Wilsey with Wilsey Asset Management. Brent, enjoy the rest of your Easter Sunday. Thanks for joining us.
You too. Thank you.